How does the Fed preemptively prevent inflation? It has an open market committee which buys and sells treasuries, as well as other investments. If it wants more cash in the hands of members' banks so they can loan it out, it buys their assets. Secondly, it sets the Fed funds rates, which tend to be close to the rates banks charge. If it wants more consumption, it reduces the interest rates. If it wants less consumption, it raises them. The Fed has to pay attention to the velocity of money as well as the money supply. Money that goes into consumption tends to increase the velocity of money (MV), and money that goes into investment tends to decrease the velocity of money. So it can set regulations that encourage member banks to invest rather than make loans, thus slowing the MV. There are other tools, including the discount rate and rediscount rate, the reserve requirement, and other regulations. But primarily, it's the Open Market Committee which does the day-to-day heavy lifting for management of the money supply. The cause of inflation: total amount of money increases, while the total production rate and services decline. In my opinion, Fed should take the following actions to prevent inflation. Advise the politicians to stop the trade war so as to enhance the efficiency of trading, in such a way that the import goods could be kept at low cost. Advise the politicians to deal with spread of COVID-19 so as to restore normal bushiness at the soonest possible. Advise the politician to avoid unnecessary argument and wastage to improve the efficiency of their policy. Advise the politician to pay more attention to environment protection, energy efficiency, adoption of green energy, and saving our world from global warming and extreme climate, which turn out to enhance overall asset including agriculture, water resources, and other natural reserve in the America. I don't think anyone knows, as the Fed has never done anything to prevent inflation. It is busy creating price inflation by inflating the money supply. Since the Fed was created and effectively given control over the money supply, annual inflation has averaged 3%, according to the U.S. Bureau of Labor Statistics. During the previous 113 years, 1800 to 1914, average inflation was 2%. -0.2% per year. The head of the Federal Reserve has announced that the Fed intends to preemptively cause 2% annual inflation, not prevent it. If price inflation is a good thing, the Fed is doing a great job. By raising the discount rate, resulting in member banks RSASING their short-term and mid-term rates, thereby reduces borrowing by individuals and businesses, thus reduces overall spending, which causes businesses to stop increasing prices or to lower prices.